Welcome to our daily Forex market analysis, and this is for trading on November the 20th, 2019. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. Okay, so coming up on Wednesday here, we have ECB Financial Stability Review. This one can move the markets if they say anything that is more dovish for the economy. So if the forecast is lower, that can have an impact on the markets. But at this point, I think they have kind of been talking with the monetary policy, so I'm not expecting a huge impact from here. We do have the inflation numbers, the CPI numbers here out of Canada. And this is one of the numbers that the central banks track. So we have to keep an eye on this, because if the CPI numbers drop, that would be, or they come in below expectations, that would not be good for Canadian dollar, and we could see that Canadian dollar drop. We also have FOMC meeting minutes coming out here. At this point, Fed essentially is sticking to the viewpoint that that they are going to basically hold things stable and watch the data. But should things deteriorate, then they are likely to cut the rate. They will be ready to cut the rate if there is a need, but for now they're going to hold things stable. So if the FOMC meeting minutes come out with the same sort of comments, then I'm not expecting a big impact from FOMC meeting minutes. However, if they are different, but if they are different, in terms of if there is anything that was discussed in the meeting that goes beyond what has been said from the Fed before, then we can have and see an impact on the market. But otherwise, not a ton of data here on Wednesday. So let's go on to our charts. Oh, one thing that we do need to sort of keep in mind here, two things actually. The first one is the impeachment process that's going on. Markets have largely disregarded that, and they're not seeing that as a threat to the markets. So that's one thing. Second is there's something new developing here. So right now, you may be aware that there are riots going on in Hong Kong, and that situation has been deteriorating for a bit there. Now, China has been wanting US to stay out of it, and so far US has stayed out of it. However, today there was this news that came out just recently here that US Senate has approved the Hong Kong bill. Basically, what we have here is that US, they passed the bill to provide support to basically to provide support, right? For the protests here, sorry. And at this point, China has not responded, but China does not like interference from outside, especially from the US. So this could have a negative impact on the US-China trade negotiations. So keep an eye on this. And if we see any kind of comments in regard to this, we could have an impact on the equity markets as well as Japanese yen and safe haven assets. So just something to keep in mind here as it develops. All right, so now, as usual, let's start off by taking a look at our euro dollar in terms of our technicals here. Yesterday we were looking for a move higher. We did get that move, but not much of a move here. So at this point, bias is still bullish, but now we are coming to that point where we could see a turn in events here. We are getting close to the resistance here, where price hasn't quite, it's not that bullish anymore. The candle is smaller, the momentum is getting out of the price. Now what we need to see is how FOMC meeting minutes come out. If there is no change, in that case, we could see price push up and then decline from the resistance. So here I am just looking for price to move out up a little bit further. So bias is still bullish. All the candles are still bullish, but basically we could see price go into 1.1090 and then turn around, or we could see it go slightly higher into 1.1100 and then turn around. So for now, bias is bullish, but with caution because we could see price churn. So just be careful with that one. Euro dollar here, sorry, pound dollar here. Here we see that price has turned. It went into this resistance, couldn't break the daily high. And today we have seen a bearish candle close here. So bias here is bearish, looking for price to drop here. And we are into support, so just be careful. But bias is bearish. So if we were to zoom out here on our charts, we'll see this resistance here is coming from this area. So price had reacted at this level before, and now we have a rejection here. So we have a bearish candle close. So looking for price to drop further towards 1.2860 level. So bias is bearish. That's the first target. Second target here would be 1.2820. So bearish bias here for pound dollar. Aussie dollar here. Aussie has done quite well. So yesterday the RBA meeting minutes did not come out too positive, but things have turned around here. So as a result, so it did drop as a result of the meeting minutes. So basically what the Reserve Bank of Australia meeting minutes said, that they were looking at interest rate cuts, and that is negative. So price had dropped, but then it has pushed up higher. So it tested lower and then went up all the way. Now price is into resistance, this resistance coming all the way from here, but it is a bullish candle close. So if it goes through this level, we're likely to see a continuation move higher towards 6860. So bias here is bullish, but again, we need to see a break of the high before price can continue further. But bullish bias here for Aussie dollar. First target is 0.6860. Second target is 0.6880. So that is bullish. New Zealand dollar here. This one has actually broken through our resistance here. Bias is bullish here. Now looking for price to continue higher. At this point, our target, the first target is 0.6450, and second target here is 0.6500. So 6450, and if it goes through that, 6500. So bullish bias for New Zealand dollar here as well. Dollar CAD here, this one has also turned around. Price dropped initially, but then it has gone up. So we did have news here for Canada. So I just want to go back and check. Here we are. No, we did not have news. We just had the New Zealand news, which was positive. And then actually, I went too far. Sorry, my apologies here. We had Canadian dollar manufacturing sales, which had come out positive, but Canadian dollar did drop. And that's why we are seeing price has, dollar CAD has gone up. So we'll take a look. I haven't looked at oil. Oil may have dropped. So we'll take a look at that. But this is looking very bullish, a big, huge move to the upside. It is right into resistance here. So we do need to see a close above today's high. And should that happen, next target here is 1.3300. And then we're looking for price to go higher, 1.3350. So bias is bullish, but it has to hold above today's high at 1.3270. If it doesn't, it could turn and come back down. So be mindful of that, but bias for now is bullish. Let's move on to our commodities here. Silver has gone up, still into resistance, as we can see. So we do need to see a hold above today's high for it to continue. Otherwise, we could see price basically turn around right from here. So be mindful of that. Bias is bullish though. So once we see it clear this resistance, looking at 17.41 as first target. And then 17.65 as second target here. So bias is bullish for silver. For gold here, we have a neutral candle close. This is an indecision candle. Price is right into resistance here. So if it holds below this 1475 level, chances are it will drop. So at this point, oh, sorry about that. At this point, bias is neutral. And as long as it stays below this level, I am looking for it to drop, sort of like this, back into this range here. So in that case, the target would be 1446. So we have to be careful with this 1474 or 75 level. If it goes through though, it could go all the way into 1494. So an indecision candle and a neutral bias here for gold. Oil, this is why Canadian dollar had tanked here. We see a big drop in oil price. Yesterday we were looking for a drop, but it went right through our targets to the next level here. So bias is bearish still. We have a big drop, so watch out for a bit of a pullback here. But bearish bias still, and the move that I would look for here would be a pullback potentially into 55.75 level and then a drop. So in this case, the first target is 55 and then 54. So bearish bias here for oil. Copper here turned around, and that's why we are seeing our commodity currencies doing well. Australia and New Zealand, their bias is bullish here, looking for, so we have a bullish engulfing candle, and so it looks like it is turning, but it's right into resistance again. So this is the range that price has been trading in for all this time. So I would say if price goes through the resistance here, then we are definitely looking for it to go to the next level at 2.65. However, if it starts to struggle here and doesn't make it through, it can come back into the range. So this is the range that price has been trading in for last almost a week here. And if it holds below 2.62, it's likely to come back into the range towards 2.57. But it is bullish, so watch out for that move higher. If it holds above 2.62, I will look for move higher. Bitcoin is still dropping. We saw another drop today, but price seems to be stalling now a bit. Bearish bias still, but if it doesn't break through the 8,000 mark, this one can turn around here. So it hasn't broken yesterday's low, still holding above that. So if it holds above 8,000, chances are it's going to turn around and then go back up. However, overall bias is still to the downside here. Next target would be 7,700. And then if it goes through that, we are looking at 7380 level then. So bias still is bearish for Bitcoin. Let's take a look at our equities markets. Equities went up a bit and they have dropped from there. So this is our S&P 500. This one has dropped. We have a pin bar here. So bias here is bearish, and we have to see a break through the support. If it doesn't break through the support for today, it can again go back here, starting to get range bound. So if it doesn't break through the support, it can go back here towards 3130. But for now, bias is bearish and target is 3090 levels. So bearish bias for S&P 500. Nasdaq here, we have a bit of a doji here. So this one could drop as well. Target here would be 8265 as the first target, and only if it goes through are we looking for 8200. So the move that I would look for would be a pullback into 8350 potentially, and then a drop here. So bias is more to the downside here for Nasdaq. Dow Jones has dropped, a nice bearish engulfing candle here. Bias is bearish. I will look for a move lower, so a bit of a pullback and a drop. Then 27,750 is the first target, and then below that we are looking at 27,550. So 27,750, 27,550 are the two targets. DAX here, a big pin bar here. Price has been trading in this range for over a week now. It did try to go through and then has dropped. So that gives us our bearish sign here, looking for price to drop further here. 13,120 is the first target. 12,980 is the second target. So bearish bias here for DAX. FTSE here, same thing, had a huge move or a big move to the upside, but then a large pin here. So bias is bearish, big rejection here. In this case, I will look for a bit of a pullback here, potentially into 73.30 level or even into 73.50, and then looking for a drop here back towards 72.30. So FTSE bias is bearish as well. Last but not least here, Nikkei. Nikkei had a bearish candle close today. So we have a bearish candle close. We are getting close to support, just be mindful. So 23,100 is the first target here. And then below that, we have 23,000. So bias is bearish, but if it doesn't break this 23,100 level, then we could see price go back up. But overall here, bias is bearish. We are seeing this trending downwards here. So today's candle is bearish, this red candle. And now I will look for a drop here. So bearish bias for Nikkei as well. All right, so that's all I have for today. You guys have a wonderful trading day tomorrow, and I'll see you again tomorrow. Bye for now.